RIMC, I'm going to share with you a repeatable entry pattern we found. This is a fact of the market. This is how the banks have to move price higher and lower. We kept this a secret for a long time, but now we have decided to bring this to you and show you exactly how to use this entry pattern that is repeatable and consistent on every single time frame, on every single trading pair. I'm going to show you 2 ways you can use this pattern to extract profits from the market. Without further ado, let's get into this video. Banks control these markets. They are the entities with the money and the volume that moves the markets that we trade. When we buy or sell, nothing happens. When they buy or sell, the price moves. So it's their orders that we follow and read for the intention of higher or lower prices. So take a look at this price delivery here on the screen. This is the REMC concept from NJAT that shows you how to read these BFI orders. This is how the markets move from supply to demand, sell orders to buy orders, buy volume to sell volume, however you want to see it. When price stops, you need to look left and find the range that it's reacted from. So if you look at this picture now, ranges are where the volume is created in the market. Retail sees these as consolidations or those no-go zones, if you like, stay away from consolidation, so on and so on. When you actually learn to read and understand what these ranges mean and what they are represented by, you'll actually see that there is actually a lot of decision that's being created in this moment in price. So we see a sideways range, that's where direction is being created in the market, intention is being created. We see an initiation, either higher or lower, that's where that intention is being shown in the market. So intention created, intention shown. Now, when price comes back into this range at this point, this is opportunity. So intention created, intention shown, opportunity to play the continuation of that intention in the market. So not every single range is going to follow through. And when I say follow through, that's a complete price delivery. So range is the first part of price delivery, initiation, that shows intention in the market. We pull back to get the mitigation, that's our opportunity to get involved in this move. And if it follows through, we see that completed price delivery and a new intention created in the market for that continuation phase of price. So not every single range will react and follow through, but we can still play every single range, play in that same price delivery of range, initiation, mitigation, because that's always going to be our opportunity to get involved in price. So when we see that price has stopped in a certain area or after we've seen an initiation up, this is where we look left. We find the range that price is reacting out from, and then we go down to the lower time frames here. So we zoom into this here at this point, and we play our entry system on the lower time frames, playing the intention that's created at a previous range. Now, not every single range is going to follow through, and we don't expect that every single range is going to follow through. But at NJT, we'll teach you how to read and identify each part, how to identify ranges, what they mean, what they are created for, how to pick the correct one, where to look for them and which ones to trade and which ones to avoid. We will teach you to spot the intention, how to use REMC to read direction, and how to enter using this technique. How to enter on the mitigation using a safe stop loss and a precision entry. Every range will see a reaction because there is volume stacked inside there, but the ones that follow through and hit TP is the ones that we teach you to see. Each part of this price delivery has logic and reasoning behind it, which will help you to identify the delivery as price is printing in the live markets. If you can learn to read the RMC price delivery from the higher time frame and you can get lower time frame entries, that's how you can catch risk to rewards of 1 to 10 and way more. If you're happy to hold these trades, you can make more than 1 to 10s. You can make 20, 30, 40, 50+% in just one trade. I'm going to show you in this video how that's possible, so stay tuned. So now you've seen this entry system here, now I'm going to show you how you can build a narrative. So as I said, that range, initiation, mitigation, continuation. If we used to split this down into 4 parts, it is like so. We have sideways range, that's the first part, initiation is the second part, mitigation phase is the third part, and the fourth part is that continuation into the high. That completes a price delivery. When we've seen this pattern completed and we've got in our opportunity, the next target is the high for that continuation of higher prices. Now, if I'm trading this as a narrative, which means this is the higher time, if this is the higher time frame picture, let's say it's 15-minute, for example, and we're trading intraday, if I'm seeing this part of price delivery, range and initiation, and now we're coming back into that point of mitigation. Like I said, now I'm going to zoom in on the lower time frame and look for my entry. So let me show you on the chart how we can do that and exactly how we can use this pattern, this repeatable entry pattern, to build a narrative in the markets. So here we're on the 15-minute chart now, and what we can see is that price is contained sideways here. You see price is contained sideways between this high and this low. So this is our range. This is range structure in the market. This is the first part of our price delivery. The second part, between this low and this high that is created in the market, that is our initiation phase. So this is the first part of that price delivery, range and initiation. This is showing us intention of higher prices in the market at this point. Now, what we're doing is when price comes back into this mitigation, which is our opportunity to get involved in this intention that was created here, we don't know if the price is going to continue, but we can use the concepts and the understanding and the location of price to say that this is a great opportunity for a buy low continuation following this narrative that was created between this low and this high in the market. Now, all we're doing is we're placing bets at good locations. That is all trading is. We're placing bets at good locations when price is high probability to continue in our favor, when the odds are stacked in our favor to see that move continue. Now, we're not just looking for this pattern anywhere. We're using other concepts in NGAT to put ourselves on the right side of this intention. But we can start to read that intention now, and you can start to train your eyes to read this intention in the market so that you can start to get involved in the opportunities. And this is exactly how we trade. This is exactly how we read the markets. This is the fundamentals behind how the market moves on any currency pair. We've just decided to pick Euro USD because that's what we have the most experience trading. So as we can see, back to the chart here, so we have range and initiation. That has created this high here in the market. So now this is our price range that we're in between. Now, that's the first part of identifying intention in the market. So we'll draw that on now. So we've got sideways range here. Now we know that we're going to be looking for our point of interest back into the sideways range. We have another sideways range here inside the range before price is initiated higher. So price is contained between the high and the low, which I'll draw on now. This high and this low, and this is contained inside a larger sideways range. So sometimes we can get smaller ranges inside larger sideways ranges, and this is where we know that when we look back in price, this is the area that we want to look back into to see that opportunity for that continuation in the market. So we see sideways range initiation, that creates this high in the market, right? So if price reacts back from this range, the next target for price for that continuation is to take out this high, and that completes range, initiation, mitigation, continuation. So you can see how we can start to build a narrative and a direction for price just purely based on using this one concept that we have. So at this point of mitigation, this is where I go down to the lower time frames because I have my direction in the market now. I have my narrative, I have my story, I have my understanding of where price wants to go. Now it's just about getting involved in an entry that fits my entry criteria in the direction of this higher prices and in the direction of this continuation phase of price. So that's the first example of how to use RIMC to build a narrative in price, and this is exactly what we do every single day. Now I'm going to show you another one, and then we're going to go into entries, and I can show you how you can use this same concept to get involved in entries, playing the narrative. So we can see here again, now we have again that same price delivery that we always see in the markets continuously repeated. We have a sideways range here. We have an initiation to the downside. Again, it's a sideways range because we're contained sideways. We have an initiation to the downside. We get that pullback into the range, mitigation, and then we see continuation to the downside. Then what happens? We get that continuation. Again, we get sideways range, initiation, mitigation, continuation here in the markets again to the downside. Then what happens? We get the same thing, the same repeated price delivery, sideways range here in the markets. We get an initiation to the downside, we pull back into the range, mitigation, continuation here to the downside. Now this just continuously repeats over and over and over again in the markets, and this is how we build narratives on the higher time frame. This is how we can get involved in trades where we're taking 10% profit on a single trade. This is how we can do it because this is the higher time frame. This is the 15-minute. When we go down to the 1 minute, we know exactly where we're looking for those sell orders to be mitigated. It's back into the sideways range. So all we're doing now is going down to the lower time frame and seeing our entry criteria to get involved in this move that's already been set up for us in the market. So now you have your narrative built in the markets, and now you have your direction in the markets. Let me show you how you can get involved in these moves using the same entry pattern and the same entry criteria that you see here on the higher time frames. Remember, the market's a fractal. What you see on the higher time frames is also going to be repeated on the lower time frames. I think what people think about the minute chart and the seconds chart is it's all noise. But if the market's a fractal, exactly what you see here on the 15 minute is exactly what you'll see on the minute chart and the 15-second chart. They are all exactly the same. All you're doing is zooming in and out of price to get more perspective on the same data. So let's go on to the minute chart now and see how we can get involved in this move. Okay, so we're now down here on the minute chart. I'm just going to zoom out so you can see that we're still playing that same price delivery, range, initiation, mitigation, continuation, which then means that this low is our next target for that continuation of that price delivery that we're going to see now. So we're now back up into that point of mitigation. Now you can understand exactly which candle that you're playing out from when you learn from us from NJT. This will be in the course and you'll learn this after at least 1 week of being with us. So now I'm just going to go into the entry so that you can look at how you can enter this move. Again, we've already built the narrative. We already have our direction in the market. We already know exactly where we're looking for our entry points. So now it's about seeing that entry here on the 1 minute chart. So right now, price is moving to the upside. We're seeing bullish order flow. We're seeing bullish trend in the market. So we want to see something change before we're looking to get involved in this. Otherwise, price could come up into this mitigation. We could see a reaction and then continue up into higher prices. So we want to see bearish order flow. And what is bearish order flow? It is range, initiation, mitigation, continuation. That same pattern that I just showed you. That is orders being created in the market, intention being shown in the market, mitigation of those orders, and continuation of that intention that has been created inside this sideways range. So now let's look for that pattern on the charts. So we see now that price has created a sideways range here. We're contained sideways here. We see the initiation to the downside now. This is bearish order flow at a point of mitigation, playing the direction to the downside now. So we have our sideways range here. We have our intention shown, which is that initiation to the downside. Now all we're looking now is for that point of mitigation so that we can look to get involved. Now, if we're in NJT, we're looking at good locations as well. Now, if you're just looking to play this as a point of mitigation, you can get involved with a 5 pip stop, for example. And if price runs down and sees continuation, you can get involved in a nice 1 to 6. Now, we look to get involved in price when we can get very tight stops and play the intention and get higher risk to rewards out of the market. So let's just play this forwards. We're looking at specific entry candles inside that range. So we could have entered this trade with a 3.8 pip stop loss because we're playing the specific candle inside the range that we know creates that intention to the downside. So again, all we're seeing now, range, initiation, point of mitigation, which is our entry, continuation, targets this low to the downside. And it's important where this is happening, at what location this is happening, and our intention, which is built on the higher time frames. So again, let's play this forwards. And we see that continuation to the downside. So now that price delivery has now completed to the downside. Now we see that intention to the downside. Our risk to rewards always a 1 to 10 as a minimum. Some traders in NJT trade a 1 to 5 risk to reward. Some people trade on the 5-minute time frame, the 10-minute time frame, the 15-minute time frame. It is all about your preference, what you're comfortable with, what you're able to read, how much time that you want in the markets to get involved in the trade. But the overall, the entry and the narrative is always the same. How we build our narratives, how we build the entry is always built on the same repeatable price delivery, because like I said, these are the facts of how the market has to move. So as we see, we get that continuation, range, initiation, mitigation, continuation. We know that the next target is this low for that continuation in price. So let's play this forward. As we see, price pulls back into that same range. So again, we have here sideways range, initiation, mitigation, continuation. Now, if you had missed the first entry up here, you could have got involved in this again as a continuation to the downside. Let's play it forward. And as we can see, intention continues, and you would have hit your 1 to 10 take profit on this trade relatively quickly. You would have been in this trade for over an hour. So that would have been 10% in just over an hour, playing that narrative, playing that continuation to the downside. And this is a trade that Chuck's got involved in here at the top for a continuation to the downside. And this was literally his exact entry in this trade here to the downside as well. So that's one sell position. Let's go back to the buy position and look at how you can do this on the opposite side. So as I said earlier, we built our narrative for range, initiation, mitigation, continuation. This is our point of mitigation. So now we're just going to go onto the lower time frames, and we're going to look to take continuations into this high here to complete that bullish price delivery, range, initiation, mitigation, continuation. So we have our narrative, we have our direction, we know where price is going to target. Let's go onto the minute chart and find our entry. So now we're down onto the minute chart, we can see that price has reacted out of that point of mitigation. I'm just going to zoom out now so you can see the perspective on the minute chart. Range, initiation, mitigation, continuation. This is the target. This is the direction for higher prices now. So we're at that point of mitigation that we see here, printed on the charts. What do we see? We see price creates a sideways range here. We initiate to the upside. Now, the reason we'd be looking at this sideways range is because we're pairing it with another concept that you can learn at NJAT. This is also a range, but this is a range at high prices. So we're not looking to buy high, we're looking to buy low. So this is another one of our concepts that we use at NJAT so that we can pick the specific range that price is going to react out from. Now, you can see that this range initiated and created this high. So now we've got range, initiation, mitigation, and if we react and follow through, this high gets taken out. So you can see how the concepts start to become fractal now. Doesn't matter what time frames we're on, we can still use the same concepts to build trade ideas and to build our direction and our entry. Now, let's say, for example, you don't want to trade this as a reaction, which you could do. You could put your stop at 50% of the range, sorry, your entry at 50% of the range, stop underneath. That's a 10 pip stop. That's quite a large stop in the markets. So instead of that, what you could do is you could have this as your entry point here, and you can watch price delivering. So as we see, price is creating these moves here to the upside. We get that reaction. What do we get? Sideways range, initiation, mitigation, continuation. So now if you wanted to play that as your continuation, that's your opportunity to get involved in this move to the upside. So as we can see, range, initiation, mitigation, continuation at a point of mitigation. Stop is safe underneath the low of this range here because you're playing that as a continuation. And as I said, our minimum risk rewards are 1 to 10, and that would complete that price delivery on the higher time frame to target this high. And as you can see, this played out, took a little bit longer to play out, but as you can see, we played out for a 1 to 10 continuation. That's with a 7 pip stop. Typically our entries are going to be between 2 to 3 pips. So I'm showing you an opportunity that you could have got involved in with a bigger risk to reward, because there are traders that use bigger stop losses in NJAT, but typically our entries are going to be those 2 to 3 pip stop losses. Now, RIMC creates structure in the market. So every single point of mitigation, whether it's a higher time frame or lower time frame point of mitigation, these create the structure in the markets that you see. Who do you think creates this structure? It isn't created randomly. This is created by the banks. Those trends in the market are created at points of mitigation from RIMC. So this happens on every single time frame. So you can see the entry RIMC, that created a new low in the market here. Range, initiation, mitigation, continuation, that creates a new low in the market. So as we can see, the trends are created by the RIMC price delivery. Once you learn how to identify each phase of RIMC, you can start to train your eyes to see this in the live price. You'll then be able to anticipate moves before they happen because you're using a model that is a fact of how the price moves. What I'm going to do is attach a video on the screen now in the top right. so you can see exactly how we use this in live price and how we start to anticipate moves before they even happen. Thank you all for watching. If you enjoyed this video, leave us a like and a comment below. If you want to find out more about how we trade, visit our website at notjustatrade.com. You can find us on Instagram at notjustatrade, and you can join our free public Discord using the link in the description of this video.